Alright friends, welcome back to newspaper editorials discussion. Today there are 5 issues, and the first one is with regard to the last mile concerns in the implementation of goods and services tax. Second one is pertaining to Tawang, China. We are going to deliberate on what is problem with Tawang and what is the dispute between India and China. The third issue is with regard to GDP after demonetization, whether the GDP figures of Q3 are reflecting reality or not. This is continuation of the discussion. Today we are going to throw some light on gross value added and GDP. What is the difference between GVA at factor cost as well as GVA at basic prices? You will be clear about this. Then fourth article is with regard to bringing more and more people into the tax net, but that article has not does not appear to be somewhat rational, but anyhow I will throw some light on that. Then the last is with regard to some poll reforms, that is in continuation of whatever we are discussing with regard to poll reforms, right. So now it is goods and services tax. We presented a detailed capsule 31st week, that is capsule 6, 1st August to 7th August, that is 31st week. Please view that if you want more clarity on goods and services tax. And if you look at the chronology of GST, the issue for the first time was discussed in the report of Kelkar task force in 2003. Subsequently, government mooted the idea in the budget speech of 2006-7, and it was thought of implementing from April 1, 2010. Subsequently, 115th Constitution Amendment Bill was introduced in March 2011, and with the dissolution of 15th Lok Sabha, that was lapsed, and subsequently government passed this Constitution Amendment Bill, and which is now known as 101st Amendment Act, which came into force from September 2016. This is the 12-year history of the saga of GST, which is going to become reality within the next few months. And present day structure, that is center is collecting some taxes, states are collecting some taxes, and here central sales tax is on the interstate sale of goods, and it is imposed by the center but collected and appropriated by the states, and the remaining things are all very clear to you. I need not explain anything, and these are the taxes which are going to be subsumed after the introduction of GST, except basic customs duty. All these taxes are going to be subsumed under goods and services tax. And present day problems, let us spend 2-3 minutes on the present day problems with multiplicity of indirect taxes. The first problem is input credit for intermediate stages of production is not perfect, as some taxes are by center and some taxes are by states. Then what happens? This intermediate states of production will be there, and input tax credit is not there when the tax is imposed by the center, and when the tax is imposed by state, I am talking about some other tax. So here input tax credit is not proper in the present day structure, and as input tax credit is not perfect, because of which cascading of prices is taking place, because it is becoming tax on tax. That's why it is resulting in cascading of taxes. Then overall tax, because of this, is coming to somewhere around 30% to 60%. And another important aspect is when each and every state has got a different tax structure, different rules. When one truck is entering another state, India is literally working as 29 countries. That is the biggest problem, and higher logistics costs at each and every check post. trucks are being stopped because of various laws, and because of this reason the logistics costs are increasing. And another important aspect is taxation at each and every stage in one form or the other made the things worse, and at the same time corruption will also be more when number of levels of taxation is more. So these are the things which we are facing. The next one is European Union with 28 countries is acting as one single market, but India with 29 different states is working like 29 different markets. That is the biggest problem of present day indirect tax structure, and as the taxation is at multiple points, tax evasion is also quite common in our country. So to eliminate all these drawbacks, now goods and services tax is going to become a reality across the country within few months. That is what I want to convey. And advantages I listed out here. Whatever difficulties I have just now stated, all those difficulties will go away and they will become advantages, like GDP will increase in the long run by 1 to 2%. Most important is uniform seamless market across the country with one common market, and the consumption based taxation will be there rather than production based, and transportation of goods will become cheaper across the country, and manufactured goods will become cheaper, and financial documentation will increase, and in turn incidence of tax evasion will go away, and it supports one nation one tax theory, and it will subsume most of the indirect taxes, and at the same time substantial reduction in logistics costs will be there, and low corruption and low compliance cost. So these are all the advantages of goods and services tax. And here from now onwards I am looking at some important aspects. Basically in the preliminary examination also critically you may be asked. So the discussion from now onwards will be useful for you to face preliminary exam or PCS or group 1 like examinations. First one is CGST. CGST is central GST, and this will be levied and collected by the center. State GST, this will be levied and collected by the state. And IGST. IGST is basically center will levy and collect on interstate supply of goods and services. This is very important. If someone talks about IGST, this is basically levied by the center, and center will collect interstate supply of goods and services. What I mean to convey is center will collect on the interstate supply of goods and services. So this is IGST. A potential question can be asked, what do you understand by IGST? And GST Council. This is the potential question can be asked on this. You see, GST Council, it is as per Article 279A of the Constitution. As we have already discussed, 101st Constitutional Amendment Act came into force in September 2016. As per that Act, GST Council is to be constituted within 60 days. So this is 279A of the Constitution, and here GST Council, the chairperson is the Union Finance Minister, and it represents both the center and states for devising the mechanism. It represents both center and states. Center will have 1/3 weightage. Here 1/3 weightage is by center, 2/3 weightage is by states. Please understand carefully, 1/3 weightage by the center in the GST Council, 2/3 by the states, and for quorum, for the meetings to take place, half of the strength must be there. So these things are very important, and at the same time to pass any legislation, or you can say to effect any change, basically 3/4 of the weighted votes of the members present and voting must be there. So here half of the strength constitutes quorum, that is one point, 1/3 weightage for center, that is second point, 2/3 weightage for states, that is third point, fourth point is 3/4 of the members, or you can say 3/4 of the weighted votes must be there to effect any change in GST structure. So, these 7 points whatever I have stated are very, very important. If you look at any examination, then GST network, basically for implementation of this goods and services tax, for implementation GST network is there, and here from examination perspective GST network is not for profit company, section 25 company. Section 25 company means not for profit company. It is not for profit company. And another important aspect is people may feel that GST network is government institution. No, it is non-government private limited company. So, critically a question can be asked about GST network. It is non-government private limited company, most important. Here the centre's share is 24.5%, states and 2 union territories which have assemblies, Delhi and Pondicherry. So, total 31 put together, 24.5% weightage. So, 24.5% by the centre, 24.5% by 29 states and 2 union territories. So, it makes 49% and remaining 51% is with non-government financial institutions. So, this is non-governmental, not for profit, private limited company where government's shareholding is 49%. That is why some issues are raised with regard to secrecy of the data of the taxpayers, right. Then more on GST in examination you may be asked certain critical aspects. I included here, please go through them. Basically GST is a destination based tax. If some goods are manufactured in Tamil Nadu and sold in Uttar Pradesh, taxation will be there in Uttar Pradesh. So, this is destination based tax, and a shift from state of origin to state of consumption, this is very important. Then less revenue may be there for manufacturing states like Gujarat, Maharashtra, Tamil Nadu, and in fact developed states may lose some revenue because of the reason it is a destination based tax. Some car may be manufactured near Chennai, and if it is sold in Patna, taxation will be there in Bihar. So, destination based tax, Bihar will be benefited and Tamil Nadu will be the loser. So, under these circumstances, central government stated that there will be compensation for 5 years for the states whoever are losing it. So, this is very, very, very important, and consumption or destination states will benefit initially because of GST, and origin states like Maharashtra, Tamil Nadu, Gujarat will be the losers to some extent, and government will compensate for that loss for 5 years. This is another important aspect, right. Having learned this, some 3 words are there in this passage. Myriad. What is the meaning of myriad? Myriad means a very large number of something. In the passage, it is talking about large number of taxation rules are there at present in various states. At present, the indirect tax structure in various states is with myriad rules and regulations. So, myriad means a very large number of. Second word is set the cat among the pigeons. Here the meaning is to do something that causes trouble or makes more and more people angry. That is setting the cat among the pigeons. It is quite often used in the passages. So, setting the cat among the pigeons means to do something that causes trouble or makes a lot of people angry. Draconian. What is the meaning of draconian? Draconian means government laws which are extremely severe or go beyond the normal or right way. When some laws are too severe, they are called draconian. So, these 3 words please do not forget. And finally, 3 points mentioned in the editorial. The editorial suggests that a cess has been proposed on luxury and sin goods. You may have a doubt what is meant by sin goods. Sin goods are just like cigarettes on cigarettes, there will be demerit taxation. It is nothing but sin tax, because cigarettes are harmful to the health. So, higher tax will be there on cigarettes, and if you look at pharmaceuticals, they may be taxed at lesser rate. So, that is merit tax, and this sin tax is high, and cigarettes are example of this sin tax. So, here 28% is proposed, and more than that cess is proposed, and the article says that this cess will compensate the losing states for the first 5 years. As I have already told you, some states are losing. So, this cess will compensate the losing states for 5 years, and after that this cess could be replaced with higher GST rate without going for parliamentary approval again. So, this 28%, if cess is there some 10-15%, that can be added subsequently without going for parliamentary approval. Second one is anti-profiteering penal provisions are vague and draconian. I have just now explained what is meant by draconian. Draconian are government laws which are extremely severe or go beyond what is right or necessary. So, here the anti-profiteering penal provisions, you may have a doubt, what is meant by anti-profiteering? Here merit goods are taxed at lesser tax of 2%, 4%. Now, the idea is the companies should pass on the benefit to the consumers. All the goods and services tax rates will not be uniform. Some may have 2%, some may have 15%, some may have 28%. So, when tax is less for merit goods like pharmaceuticals, that should be passed on to the consumer. So, if some firm is not passing on, then they have to be taken up. That is anti-profiteering penal provisions. They are vague and draconian as per this editorial. Third one is bringing real estate under GST. This is very important. To reduce corruption, real estate must be brought under goods and services tax. That is as per this editorial. So, these three issues were mentioned in the editorial. More than all these things, we discussed and learned a lot many things through today's discussion. Look at the next one, Tawang. Tawang is in the news quite frequently, and as and when some official or foreign dignitary visits Tawang. Previously, USA ambassador to India Richard Verma visited Tawang. China raised objection. Now, Dalai Lama is planning to visit Tawang, and China raised objection. As and when some dignitary is visiting Tawang, China raises objection. What is the reason for it? We are going to deliberate. Before that, Tawang is the town situated at an elevation of 3000 meters around. Please look into this picture. Tawang is situated here, and one side it is Bhutan, and on the other side it is the Tibet region of China. Tibet is autonomous region under the sovereignty of China, please do not forget, or you can say Tawang is situated one side Bhutan, other side China, and Tawang is into the news because of the reason I am going to explain now. And if you look at Tawang, it is part of Arunachal Pradesh, please do not forget. Tawang is integral part of India, and you can say Arunachal Pradesh, it is part of Arunachal Pradesh. And another important aspect is Tawang monastery. This is quite revered by the Buddhists, and this Tawang monastery was founded based on the wishes of 5th Dalai Lama and considered to be the biggest outside Lhasa. Then another important point is, it is claimed by China as part of South Tibet. I will come to that issue a little while from now. And this Tawang is major holy site for Buddhists. And two more important aspects, this is inhabited by Mompa people, that is one important aspect. And another important aspect is Losar festival. This is a famous festival in Tawang. So, having learned these things, if someone talks about Tawang, one side Bhutan and on the other side China, please do not forget. And this is Arunachal Pradesh. And what is the issue? The history of Tawang I will tell you. In 1913, Tibet declared independence. 1913, Tibet declared independence, and of course, from 1950 or so, Again Tibet became integral part of China as autonomous region, that is different story. But let us go back to 1913, Tibet declared independence, but the subsequent Chinese governments did not recognize this. Though in 1913 Tibet declared independence, but Chinese governments did not recognize that. And we have to go back to 1914 Shimla Accord. In fact, this 1914 Shimla Accord was a trilateral agreement proposed by China. China initiated that agreement, that was between China, Tibet and India, and or you can say British India. Whatever the reason, China has not signed it. Only Tibet and British India signed it. And as per 1914 Shimla Accord, McMahon Line was recognized. McMahon Line was the new boundary between Tibet and British India. Now Tibet became integral part of China. That is why we call McMahon Line is the boundary between India and China. But 1914 Shimla Accord defined McMahon Line as the new boundary between Tibet and British India, but China initiated that. It has not signed, and subsequently it is creating a lot of trouble. And one most important aspect is China says, subsequently China says, Tibet was not sovereign. China says Tibet was not sovereign because in 1913 when Tibet declared independence, China did not recognize that. So subsequently China says Tibet was not sovereign and did not have the power to conclude into treaties. So that is why in the Chinese version, this 1914 Shimla Accord do not have any relevance because Tibet signed it in 1914, but China says that Tibet was not independent and sovereign in 1914. Though Tibet declared independence in 1913, China did not recognize that. Because of that reason, China do not recognize the existence of the boundary between India and China. The present boundary China is not recognizing, and Chinese map shows some 65,000 square kilometers of the territory south of the McMahon Line as part of Tibet Autonomous Region, which they call it as South Tibet. So below the McMahon Line, 65,000 square kilometers below McMahon Line, they consider it as their territory and they call it as South Tibet. So this is all about this issue. So Tawang forms part of the disputed region as claimed by China, right. So this is the border dispute. If you look at India and China, there are two aspects. Towards this side of the border, this is Arunachal Pradesh issue, and that side Aksai Chin issue. If you go towards Kashmir, the dispute between India and China is Aksai Chin region, whereas if you come towards this, Arunachal Pradesh is the dispute between India and China. So this is all about the Tawang issue, and here main irritants between India and China. One biggest irritant is aggressive presence of China in our neighborhood. In our neighborhood, aggressive presence of China. It is constructing ports and it is investing heavily. Ultimately, it will use this for their strategic interests in Indian Ocean region. There is no doubt about it. Second one is Aksai Chin region and Arunachal Pradesh. These two disputes, China claims part of Arunachal Pradesh as their territory, and objection to our entry into nuclear suppliers group. Then Masood Azhar case, United Nations designating Masood Azhar as a terrorist, China is objecting. Then Dalai Lama issue, Dalai Lama, China feels that Dalai Lama is a separatist leader and India gave asylum to Dalai Lama in 1959. That infuriated Chinese. Now Dalai Lama wants to visit Tawang. Now that is further infuriating China. Then trade deficit is increasing. Chinese imports to our country, our exports are reducing to China and imports from China are increasing. That is why trade deficit is increasing. That is cause of worry for India. We are strong in services, but China is not giving entry to our services. At the same time, our pharmaceutical sector is also not being given free entry in China. So these are the irritants as far as India and China is concerned. right. So, you learnt in detail about Tawang issue and India-China irritants, cracking the GDP mystery. This gross domestic product, though people expected GDP in the range of 6.5%, Q3 figures suggested around 7%. Here GDP growth and demonetization, certain figures are quite contrast. I listed out from this article. You see, two-wheeler sales in December collapsed by 22%. Then cement dispatches collapsed by 9%. Real estate saw 40% decline in home sales in December. I am talking about December 2016, the next month after demonetization. So, these figures you see, and bank loan growth just 5%. It is expected to be somewhere around 20%, 15% or so, but it is just 5%. In fact, it is not taking off for the past 1 year, 2 years, that is different story. So, here you see these things dragged in the month of December. And if you look at other figures, steel output increased by 15%. I am talking about December figures. Previously, these two-wheeler sales declined, cement dispatches fell, real estate especially house sales reduced drastically. See the paradox. Steel output increased by 15%, power generation surged by 16%, refinery output 6.5%. Companies doubled their borrowings from the bond market. Though the takeoff from banking sector is not there, but companies doubled their borrowings from the bond market, right. So, look at further. Manufacturing recorded 8.3% in comparison to 13% in the same period last year. Then finance, real estate and services 3.1% collapsed from 10.4%. Construction weakened to 2.7%. And look at the paradox. 6% rebound in agriculture in comparison to 2.2%. 6.8% increase in electricity, gas and water supply, 11.9% in public administration, probably because of the pay commission payments. So, these paradoxes are there. Under these circumstances, three issues we have to deliberate. GDP is quite respectable at 7%, but the real problem is gross value added. And let us look at for 2015-16. If you go back 1 year, for 2015-16, GVA was 7.8%, gross value added was 7.8%, and for the year 2016-17 as a whole, it is reduced to 6.7%. In fact, as I have told you in the last class, gross value added is the real indicator. So, here there is a reduction of 110 basis points or 1.1% in gross value added, that indicates that there is a slowdown in economy. So, gross value added last year was a 7.9%, sorry 7.8%. Now, this year it is projected 6.7% as a whole. So, there is a reduction of 110 basis points in GVA. However, GDP is expected to fall from 7.9 to 7.1%. GVA fell by 1.1%, but GDP is expected to fall by 0.8%. The reason is basically 25% surge in indirect tax collections, and you will come to understand a little while from now, because I am going to explain you in detail. So, this is because of 25% surge in indirect tax collections, basically taxes on petroleum products. Somehow government is more and more imposing this indirect taxes on petroleum products during the past 2 years, and they are collecting huge amount from petroleum products. That is the reason there is a gap between GDP and GVA, right. So, having learnt this, let us go back to the basics, because last class some students asked doubts about what is gross value added and what is GDP, and please do not forget GDP at constant prices. Constant prices means base is 2011-12. So, we take GDP at constant prices without taking inflation into account. So, this is GDP at constant prices, that is one aspect, please leave it. Let us come back to this GDP calculation. How it is calculated? One method is value added method, what we call GVA. What is GVA? gross value added. Before understanding this, you should have clear idea about what are the factors of production. There are 4 factors of production: land, labor, capital, entrepreneurship. So, here on land there will be rent, on labor there will be wages, on capital there will be interest, on entrepreneurship finally there will be profit. So, these 4 are final value added in the economy. So, these 4 factors of production is the final value added in the form of rent, wages, interest, then profits. So, these 4 put together is value added, right. So, move on. So, as I have already told you, rent, interest, wages, profit, these 4 put together is value added at factor cost. This is gross value added at factor cost. So, at factor cost, gross value added, or you can say GVA at factor cost is the total addition of rent, wages, interest, products. So, this is GVA at factor cost, and for this you have to add production taxes and subtract production subsidies. Please understand carefully, I am introducing production taxes. Sometime from now I will introduce product taxes. What is the difference? So, production taxes, please see this. Production taxes means any company, while establishing the company or for running the company, they have to pay certain taxes. So, this is property tax, this is stamp duty, registration taxes. So, these are all production taxes. These are the taxes in due course of production of some product. So, the production taxes example is property tax, stamp duty, registration taxes, these are paid by the companies. So, here for GVA at factor cost, you have to add production taxes. Similarly, deduct production subsidies. What is meant by production subsidy? You are looking at MSMEs. Government, while producing some product, may give some subsidies. MSMEs, lot of subsidies are given by government. So, government subsidies to MSMEs, and at the same time government may give subsidy to inputs in agriculture. Government may give seed subsidy, government may give some fertilizer subsidy. These are all input subsidies in agriculture. These are not on the final product. If subsidy is given on LPG, that is a product subsidy. But the production subsidy is something different. Production subsidy is in due course of production, when some subsidy is given, that is production subsidy. So, you please differentiate between production subsidy, product subsidy. Product subsidy is the subsidy given on the end product, but the production subsidy is given during the course of production. During the course of production, if some subsidy is given, that is production subsidy. So, here for GVA at factor cost, add production taxes, subtract production subsidies, you will get gross value added at basic prices. So, after getting gross value added at basic prices, this I have just now explained, GVA at factor cost, add production taxes, subtract production subsidies, you will get GVA at basic prices, right. So, now to calculate GDP at market prices. So, GDP is calculated at constant market prices. The meaning of GDP at constant market prices is, GDP at constant prices means taking some year as the base without considering inflation, and GDP at market prices is this GVA at basic prices, what I have explained. For that you add product taxes. What is meant by product taxes? Excise duty, service tax, these are all examples of product taxes. These are the taxes on the final product. And product subsidies. So, final subsidies after the product is produced, like you can say, if some subsidy is given on kerosene, if some subsidy is given on LPG, if some subsidy is given on pulses, if some subsidy is given on onions, these are all product subsidies. So, here GDP at market prices is GVA at basic prices plus product taxes minus product subsidies. So, finally, this GDP at market prices is GVA at basic prices plus all taxes on products, please mind they are indirect taxes, minus all subsidies on products. So, if you want GDP at market prices and you want to come from GVA at factor cost, then it is plus so and so taxes on production plus so and so taxes on products minus subsidies on production minus subsidies on products. You can easily derive at this if you know this. Simply I have substituted GVA at basic prices, what it exactly constitutes. So, friends, we deliberated in detail about what is the meaning of GDP at market prices. So, the GDP calculated is as per market prices, as per constant prices, which is known as real GDP. So, here the first point is, though the GDP is looking quite respectable at 7% because of more and more indirect taxes on petroleum products, however, GVA is around 6.7%. So, it indicates a slowdown. The second point, issue number 2 is, yesterday I have discussed, few days ago I have discussed that some black money might have come into the formal sector and artificially it jacked up the sales and output in the GDP estimates. Then the third reason is informal sector. Our manufacturing is around 45% is informal, and total informal sector output might not have captured in these figures, because the figures for informal sector will come after some time, there will be time lag. So, these 3 issues, there is some specific reason I listed out, please go through this. And GDP and GVA, when there is a difference, it indicates that government is getting revenue through the product taxes. Look at the article, all those who are out of the tax net. This article looks somewhat theoretical, and the situation does not reflect the ground reality. So, I am not taking much time on this. Factual information is our population is 127 crore as per this article. Only 2.6 crore pay income tax, it comes to less than 3% of adult Indians. Then India is dubbed as a non-tax compliant society. Too many people evade taxes is the general notion in our country. Only 24 lakh Indians reported an income greater than 10 lakh rupees per annum. In India, around 20 lakh cars are sold every year. So, these are the statistics given in this article. And is India a land of tax avoiders and black money holders? This article presents a somewhat different picture. Here it suggests a lot many things, but somehow I am not convinced with the rationale produced by the author. So, I am not considering, or I am not spending much time on this article. So, if someone wants it to read, please go through this. I have explained in detail here. Right. Let us move on to the last article, reforming funding of polls and parties. We are discussing as and when some article appears in the Hindu about poll reforms, and we presented one capsule with regard to simultaneous holding of elections. Now, let us look at this article for electoral reforms perspective. It says that corruption and political parties, it all began from independence. In fact, corporate houses, they require favors. From independence, corporate houses require favors, and politicians require money, maybe for their personal things or maybe for the party. We cannot say anything at this juncture, but corporate houses require favors, politicians required money, and we have license Raj till 1991, and only liberalization started post 1991, and ban on corporate donations till 1985. Corporate donations to political parties was banned till 1985. So, under these circumstances, till 1985 or so, the nexus between politicians and corporate houses was clearly evident after independence, because corporate houses require favors and politicians require money. So, that spoiled the entire political system in the country as per this article. And subsequently, limit on expenditure by candidates was imposed in 2003. If you look at Uttar Pradesh assembly elections, the limit is 28 lakh, and small states 20 lakh. Limit on expenditure was imposed, but politicians or political parties cleverly avoided one clause. The clause is parties and individual supporters can spend on behalf of candidates. There is one escape route here. Limit on expenditure by candidates was imposed in 2003, but there was one escape route kept, like parties and individual supporters can spend on their behalf. So, this is the escape route, and because of this proper accountal is not being kept. Whatever the money they are spending, it is going into the individual supporters account or parties account. So, everything is hazy and clear transparent picture is not there in the political funding nowadays. And present scenario is political parties are dependent on black money due to lack of public funding and lack of transparency, lack of financial accountability, no democracy within the parties. So, this is the present day status of political parties, and the need of the hour is confidentiality of the contributions rather than tax exemptions. As per this paper, this is confidentiality of contributions rather than tax exemptions. That is the need of the hour. So, if confidentiality is there, then victimization will not be there on the corporate houses. So, they can fund based on their personal thought process. Then there is a need to shift away from donations by a large corporates to many smaller contributions. The biggest problem at present is big corporate houses are funding main political parties and they are asking for more and more favors. So, the paper says that there is a need for shifting away with regard to donations is concerned from large corporate houses to smaller contributions or from many number of small corporates. Then parties can receive money from a public fund proportionately. Here public fund must be established, and depending on their donations, here parties can receive money from public fund in a proportionate manner. So, the need of the hour is specified as per this article. Right friends, we deliberated around 4 or 5 important issues. One article I skipped because I do not find much rationale in that, and GST we deliberated in detail. At the same time, the difference between GVA, GDP we discussed in detail about Tawang issue. And with this, let us conclude newspaper discussion. Please do join at 12 noon for this vocabulary discussion. Have a nice day. Thank you.